Okay, I believe I'm live. So this is Lorelia, and I am doing a YouTube live. I want to discuss something that I've been working on. I know I've been doing some very informal YouTube lives talking about my interest in real estate notes, my introduction to it. And so many people have been asking me, Lorelia, why real estate notes? Why not real estate properties? And I totally get it. And what I'm going to do is I'm kind of going to go over the difference between the two. There's no right or wrong answer. It's just your risk tolerance. It's just what you have an interest in. And so my main interest in is to one, have an asset that's going to generate income. And whether you know this or not, because I don't want to assume, but real estate is one of the main assets that can, uh, should I say, I don't know, I'm losing my train of thought, that can create passive income for you. And so, that is something that I'm working towards. I'm a big advocate of, I never do a script, so I'm really going off head when I do these videos. So, in other videos, I've talked about, individuals understanding of where income comes from. And I kind of want to do a separate video on that, but I'm going to touch on it with this one. What a lot of people don't realize is, and I was just having this conversation with someone yesterday during a consultation, and what I explained to the gentleman is that there are assets that create income for you. And so that is what the rich and the wealthy do. See, the poor and middle class have been told, I was told this too, is that if you want more money, you have to work harder. So when people think about, oh, I need more money, they're always attributing, what do I need to do? How hard do I need to work in order to make money? And so the rich, what they know is that what kind of asset that I can either control, that I can buy, that can generate income for me. That is the difference. If you look at any billionaire or even millionaire, but let's just look at the billionaires. Oprah Winfrey, Jeff Bezos, Bill Gates, even the late Steve Jobs. The list goes on and on and on. Do you really think that those individuals wake up and say, okay, how hard can I work for $1 billion? No, they're not doing that. So something about our understanding of how money works needs to be changed. So once and I've been doing this for years, learning how the economics in this country works, understanding how money is exchanged between individuals. And the one thing that I know is that real estate, it depends on what area of real estate, passive income can be derived from real estate. Now, in other videos, I've told you about real estate wholesaling, and that's more of an active income. There's nothing residual or passive with real estate wholesaling. I mean, unless you created a company and you had people working for you, and then they were doing the money, and then you were passively earning some type of income from the work of others. That's totally possible if you structured your business like that. But most people, when they get into real estate wholesaling, they understand that in order for them to get a check, they have to do the work. Real estate note buying, or even real estate properties, investing in properties, you understand that you are buying an asset, and that asset is going to generate income. And so now that I've given you like that background information on the topic that I'm going to talk about today, I just had to first set the stage before I jumped in, because a lot of people are saying, why real estate notes, Lorelia? I'm going to be going to a real estate note conference in about 2 weeks, second week in March. We're currently right now, I think March 2nd. and I'm looking forward to it. Introduced to this industry back in September, but I would even go back many moons ago. There's an investor friend that I have that he was involved in it many moons ago. I'm going back 10 years. And at that time, I was really just getting myself, my feet wet into real estate. And I was really just focusing on real estate wholesaling. And you never know where the future is going to take you. So at that time, he was doing something in real estate no buying, but real estate no buying was so over my head. And for so many people, when they think about being the lien holder to an asset, because really as a note buyer, you are the lien holder. You own the paper. You own the paper to that asset, as opposed to you buying a real estate multifamily property. That is what most people are familiar with. I want to own, whether it's a 2-family, 3-family, 4-family, duplex, triplex, depending on where in the country you live in. Most people are familiar with that. Buy a multifamily property, live in one unit, rent out the other unit, or rent out both. And so the rents that you would receive from those properties could be passive income for yourself. Now, give and take, if you have debt service that is on that property, of course, that would have to be paid first before you can passively earn something. So what I'm going to go into is the difference between the two and why I personally like real estate no buying. The one thing that I did kind of add it on here, but one of the main reasons why I like real estate no buying is really the access to the asset. I'm kind of starting at the bottom of the slide that you see behind me. But with real estate no buying, you don't have to do what is necessary if you wanted to buy a multifamily. Most people, when they buy a multifamily, unless they're buying it cash, but many people go out and get a loan. So what do you have to do? You have to qualify for the loan. You have to put the down payment down on the loan. You have to financially see if you can even afford to even buy the home. Now, give and take, there are loans out there that they will look at the rent roll that is coming in that is being generated by the asset, and they're going to look at how much you're going to borrow, and then from there you would be able to acquire the property. That's all good. But with real estate no buyer, that's not something that you would have to do. Your access to buying a note can be three, of course you can get very creative, but I kind of just put three of the main ways that you can do it. You can raise the money. You can use available credit if you have it, or you can use cash. And I don't think I put that there. I see, as I look at the slide, I didn't add cash, or you can use cash. There's no financing. Very rarely, and I'm not going to say, because I'm new to this industry, I'm not going to say that people don't go out and get loans, but you don't have to qualify for a loan. See, there's a difference between you're going to get a loan, like I said, with credit. You're going to use credit. You're going to leverage credit, something I've talked about in other videos, how to leverage your credit to create cash flow. This is an example of what I'm talking about. A lot of the things that I talk about on this channel is not theory. It's what I truly do, is what I practice. If I'm going to use credit, I'm going to leverage my credit. Many people have credit cards that are watching this video, have credit cards with very high balances, 15, 20, 25, 50, or what have you. And what happens is those individuals, when they get those credit cards, they go out and they do what is considered consumer spending. And that is why they get on the rat wheel that Robert Kiyosaki talks about, where they're living paycheck to paycheck and can't seem to dig themselves out of the rat race. I see this all the time. On this channel, I did a lot of videos on the topic of credit, and you'll be surprised how many people have came to me, had very large credit card balances, are trying to pay them off. And I always say, if I have the opportunity to work with them, a lot of times I don't do it on a consultation, but if I'm working with them, I show them. Imagine if this $35,000 credit card you had, or this $20,000 credit card, you went and invested into a $9,000 lien position in a portfolio of assets where you can be the note holder on it. And now that investment that you made with that credit card can now begin to generate you income. So it's different than you having $35,000 on a credit card, spending it on trip to Disney, buying clothes, buying shoes, whatever you do to ball out, and now you're just paying the bill. When you are investing the credit that you have to buy an asset, like I said, with note buying, you can get position of a note for as low as, I've seen some notes, really depends on it, first position, second position. It really does depend. And this, I'm not in this video, I'm not really going to go into second position notes, first position notes, which one you should invest in. But I know I have mentors that I have, seeked out in this industry, and they're showing me that you can get started as little as 10,000. So imagine you looking at your credit card, you looking at your credit report, you're seeing those high credit card outstanding balances, and you can't even remember what you bought. You still paying on that trip to Disney that you went on 3 years ago, and you haven't paid it off. But imagine if you had invested in a note and it's beginning to generate income. Now, I'm going to go to the top of the slide. Now, one of the main things that I like about real estate note buying is that as a note holder, like I said, you own the lien against the property. So you don't have the asset. The asset is not yours. Because remember, Mary wants to buy a home. In order for Mary to buy the home, she has to go to the bank and get a loan. Once she qualifies and she's given the okay to move on and own that property, she goes through closing or what have you, there is a lien holder, because now Mary has to pay the person who gave her she has to pay the person that she borrowed the money from. That would be someone like myself. I would have a lien against Mary's asset, considering if it's a first or second position, note holder. But at the end of the day, I am still in control because I own the note. Only thing Mary has is the physical asset, and hope that she's going to pay on time. So that's why on the right side of the slide, you will see that it says own the actual physical asset. So that's the difference. On the left side says the note holder holds a lien against the property. Mary has to go to the open market, the banking department, and get a loan. That's why you may hear people say, when you decide to invest in real estate notes, you are the bank. You truly are the bank. Now, once again, what I like about real estate notes is that you're managing the borrower. Remember, Mary had to go to the open market to get a loan. Now, what's her managing role? Her managing role is to manage tenants. Because remember, she's been told that if she invests in a multifamily property and that she gets tenants in there to pay her rent, then she can create some type of passive income for herself. Now, Mary is managing tenants. The note holder, who would be myself, I'm managing Mary. I'm managing the borrower. Remember, I'm the bank. Also, one thing, the third item that you see here on the slide is collection of payments are collected by a third-party note servicer. Many people always ask, well, how does it work? How do they pay you? A lot of people who invest in notes don't really, try to collect the money themselves. They will hire a servicer to collect on the notes. That's why during the whole the mortgage, the real estate fall back of 2008, you may have heard people say, and I know it was very common in the real estate industry, Whereas, and that was my first introduction to how short sales work. And so a lot of people don't know is that the payment that they make to a Bank of America or Wells Fargo, a lot of times Bank of America, Wells Fargo didn't even own that loan. They could have just been the servicer of that loan. And then when they were investors who actually owned the loan. So way back in 2008 and 2009, when I got introduced to short sales, and I know I'm going to kind of pivot off of this subject, in order for us, myself, and and I worked with some other investors, whenever we had to get a short sale approved, we were always told by the big banks, we have to see what the investor says. The investor has to give the okay to approve the short sale. And I did a video prior to this where I talked about bankruptcy and all this other stuff and the understanding of how the economics in this country works. So that is really the understanding of, well, how would people make payments? How would you get your money? There's a servicer. That's what you would do. Many note investors are not collecting payments themselves. It's different, unless a unique situation happened. You were trying to sell a home and you decided to hold the note on it, and that's the only note you have. Then you may want to collect on it. It's really up to you, depending on your accounting skills, your management skills, what have you. The fourth bullet point is the risk borrower fails to pay, you can foreclose and take possession. That is why when you're a note holder, it really depends on if you're a first position or second position lien holder. Because first position lien holders, they are, and those who invest in those, they are interested in taking possession of the asset. Whereas second position note holders are interested in the asset itself and the income. Because if you're a second position, you're never going to take possession of the actual asset. And for some note holders, that is fine. There's a method to all this. Now, if we look on the right side of the slide, it says we're talking about risk. If the tenant doesn't pay, you have to evict. Now remember, on the right side, when we say the real estate property owner, remember, Mary went, got a loan, decided she wanted to get into real estate. She has a multifamily property. She's put tenants in. But now if her tenants do not pay, she has to evict. That is the risk that Mary is taking, that Mary is dealing with. She would have to evict. And we're going to hope that Mary's going to get new tenants in or either make those payments herself, because what's going to happen is that me being the bank, the lien holder, I'm going to, if I own a first position in that lien, I'm going to take possession of the home again. And of course, our final bullet point is what I kind of talked about when I first started this live. Is I talked about acquisition, acquiring it. Many people say, well, how would I acquire it? And that's why I said it really depends on what it is that you're interested in doing. Like I said, because when you go into investing in notes, the access the access to enter the market is really not that hard, especially if you're able to raise funds. If you have self-directed IRAs, you're raising money. Now, of course, you don't want to deal with any, SEC problems that could arise if you started raising money. So you have to be very careful with that. And like I said, or you can use your own credit, or if you have cash. But that's why I'm a big advocate of leveraging credit to create cash flow. How do you leverage credit to create cash flow? You use credit to buy assets. Assets create cash flow. So when people say, where does money come from? It's either going to come from assets or it's going to come from people. And even if we say money comes from people, remember, we need people to live in those assets. And when people live in those assets, that is how we're going to get money generated. The same way if you buy an asset, you need the person. So at the end of the day, this is the direction of how I am going to, create passive income for myself. Looking forward to going to the conference, and I just wanted to share this because I had been getting questions about it, and so I wanted to share with people how it all would work. So once again, this is Lorelia, and I will talk to you in the next video. Please leave me a comment. Feel free to share, comment, or subscribe. Let me know your thoughts. Okay, talk to you in the next video. Also, if you're interested, many of you all have came to me, you're sending emails, had a great consultation with the gentleman yesterday. The credit to cash flow program is still going on. I'm going to put the links underneath this video. And so, hey, let's crush 2019. Let's not buy into the hype of the economy is failing. There are people out there who are making money. You just have to be in the circles. You just have to get the know-how to know what is going on. And so if, creating your own income, not dealing with financial despair is something that you're interested in, I welcome you to, follow me on this journey, join me on this journey, or start the journey yourself. But whatever you do, don't make no excuses. Okay, talk to you next video. Bye-bye.